So, Netflix just dropped their latest earnings report, and on the surface, things look absolutely incredible, a real blockbuster. But there's a twist hiding behind those record numbers, a paradox that's got Wall Street a little spooked. So what's really going on here? Let's dive in and unpack it.
All right, first up, the good news. And it is really good. Netflix didn't just meet expectations on revenue for the fourth quarter, they absolutely blew them out of the water. We're talking a massive $12.05 billion. That's almost an 18% jump from last year, and it just sailed past what all the analysts were predicting, a truly stellar number.
And hey, the bottom line? That looked pretty solid too. The company reported earnings of 56 cents per share, which, well, that landed exactly where the market thought it would. So you've got this huge revenue beat and earnings right on the money. On paper, that sounds like a perfect report card, right?
And yet, the stock actually dropped after they announced all this. So revenue beat, earnings met? What on earth is going on? That is the central mystery, the paradox we're digging into. And to really get why the market reacted this way, we first have to appreciate just how strong Netflix's year really was.
Okay, so let's zoom out and look at their 2025 growth engine. We're going to take a peek at the numbers behind what was, honestly, a stellar year. This wasn't just one good quarter, it was the grand finale to an absolutely incredible year of growth for them. For the whole year, we're talking over $45 billion in revenue. But here's the kicker, the really interesting part. They did that with a 16% increase in growth and a record operating margin of almost 30%. That tells you they're not just getting bigger, they're getting way more efficient and more profitable as they scale. That's the
And the scale we're talking about here is just, well, it's mind-boggling. During this past quarter, Netflix officially blew past the 325 million paid subscriber mark. Think about that for a second. It's an absolutely enormous global footprint, and it is still growing.
And this growth isn't just coming from one place. I mean, look at this breakdown. The engine is firing on all cylinders, literally everywhere. You're seeing double-digit growth in every single region. You've got these explosive numbers, almost 20%, in places like Latin America and Asia Pacific. But what's really wild is that even in their biggest, most mature markets, like the US, Canada, and Europe, they're still expanding like crazy. This is what you call balanced global power.
Now, one of the huge stories buried inside all this data is advertising. Remember when they first announced the ad-supported tier? It was pretty controversial. Well, that little experiment is quickly turning into an absolute powerhouse, a key part of their whole business model now. I mean, just look at this growth trajectory. It's insane. Ad revenue more than doubled in 2025 to over $1.5 billion, and they think it's going to double again in 2026. So, with all this fantastic news, we come back to our big question. Why the hesitation from investors? Well, the answer comes down to two huge, game-changing developments.
Let's get to the first complication, and it is a massive one. The Warner Bros. Mega deal. This isn't just a high-stakes move, it's a complete game-changer. Yeah, this is a huge one. Netflix is making one of the biggest acquisitions in media history, and it's set to change the very DNA of the company.
So here are the details. We're talking an $82 billion all-cash deal to buy Warner Bros. And yes, that includes the legendary HBO and its entire library. This is so much more than just buying some movies and shows. They're buying a whole Hollywood studio, one of their biggest direct competitors.
And what makes this so shocking is the complete 180 they pulled. Just last quarter, the co-CEO was on an earnings call saying, and I quote, "Nothing is a must when it came to buying other companies." And then, bam! This happens. It's a massive, sudden pivot away from their grow-it-yourself strategy to let's just buy the whole industry.
Okay, so a deal this big has real, immediate financial impacts. First, they're hitting pause on buying back their own stock to save up cash. Second, they're adding over $275 million in new costs for 2026. And third, they're taking on a mountain of new debt. From investor, this all adds up to one thing, a whole lot of new risk, and that wasn't the only thing making them nervous.
Which brings us to the second key factor, the company's own forecast for the year ahead. Because even though the projections looked pretty strong on the surface, there were some details hiding in there that really rattled the market. So here's the mixed signal they set. On the good side, their full-year revenue guidance for 2026 looks fantastic. Another year of solid double-digit growth. But, and this is a big but, the worry is that their short-term earnings guidance for the very next quarter, Q1, actually missed what Wall Street was expecting.
And for a stock that's flying as high as Netflix, any kind of miss, even a tiny one, is seen as a really negative surprise.
So you take that earnings miss, and you start adding in all the other worries Wall Street has, things like their profit margins might not grow as fast. They're also planning to spend 10% more on content in 2026. Then you pile on the huge, messy risk of trying to merge with Warner Bros., and suddenly you've got a situation where their stock price is so high, there's just zero room for any mistakes. Being good isn't good enough anymore. The market is expecting perfection.
So, where does this all leave us? What's the big takeaway? When you piece it all together, the amazing results, this monster deal, and the nervous forecast, you start to see a completely new picture of Netflix taking shape. The company is changing right down to its core.
The bottom line is this. We're not just looking at a bigger version of Netflix. We're watching it become a totally different kind of company. I mean, the game is no longer just about adding more subscribers. This is about Netflix evolving from that scrappy tech disruptor we all knew into, well, a full-fledged, diversified, global media conglomerate.
Just think about their journey. It started back in '97, the little company mailing out DVDs and taking on Blockbuster. Then, in 2007, they basically invented streaming as we know it. In 2013, they upended all of television with House of Cards and original content. And now with this Warner Bros. Deal, 2026 marks its final evolution into a media titan, on par with the legacy giants it once set out to overthrow.
And that leaves us with this one final critical question. Look, there's no doubt that Netflix won the streaming wars it started. They invented the battlefield and then they conquered it. But now, by buying a legacy studio and building an advertising empire, they're creating an entirely new game for themselves. The challenge isn't just being a streaming service anymore. It's about becoming something bigger, an essential, foundational entertainment utility for the entire world. And that is a battle that is just beginning.